Now, quite a busy end to the week. We kicked off Friday morning with US President Barack Obama's authorization of targeted airstrikes in Iraq. That prompted a bit of a risk-off sentiment and investors heading towards safe haven assets. One of them was the yen. We saw the euro-yen trade drifting to its lowest point so far this year, and it looks headed towards a one-year low. Gold prices, oil prices, energy stocks all drifting higher. The market's top losers today, healthcare and consumer discretionary stocks. There's a bit of a bright spot from Chinese data today. July exports way above expectations, coming in at 14.5% against market expectations of just 7%, so more than double. Now imports was a bit of a surprise dip, minus 1.6% instead of the rise of 2.6%. All in, trade surplus was an all-time high of $47 billion. So signs that the stimulus measures have been working, and that's pretty good news after the earlier disappointing data this week from HSBC's services PMI, which was at 50, a 9-year low. There was a bit of a slight bounce on the Aussie dollar on those news, and also as well copper prices, but both have retraced back to its downtrend. Aussie dollar have been quite weak on recent macro data. This morning we had some weak home loans data. Activity was just a rise of 0.2% instead of the expected 0.6%. And yesterday we had some unemployment data coming in a bit soft. It climbed to 6.4%. That was a 12-year high. Now, RBA's monetary policy statement today was a bit status quo. Low rates will be the way to go for now, so no sign of any rate hikes yet. We had a bit of a mixed Japanese picture from macro data today. Trade deficit narrowed, so that's the good part, but current account deficit turned negative for the first time in 5 months. And that was a result of the weaker yen in recent weeks. So of course we'll be expecting some upside for the yen in interim with the rising geopolitical tensions. And an interesting hedge to consider would be against the euro with the ECB's dovish stance.